We got some continuation off of the lighter than expected CPI report earlier in the week, and the ARK Innovation ETF ended up leading us higher. We had an 8.31% advance for ARK. We also had a pretty nice advance in the NASDAQ of 1.84%. And this all occurred as the TLT bond ETF finished down a smidge, only down 0.37%. We had attractive up volume for the session. We finished out with 74.5% UVol, and our trend model remains at a +1 reading. Last Sunday, we sent a video out to all Pristine Capital members, and in that video, we addressed the fact that the CPI report is the only data point that truly matters. And lo and behold, we have growth stocks that are ripping to the upside off of that CPI report. Our social media stocks finished out today up 6.32%. Of course, ARK was our big winner for the day. The Spider Innovative Tech ETF finished out up 5.69%. And semiconductors, which had been left for dead over the past month or so, finished out up 3.06%. Our high beta style factor led the market today with a 2.86% advance, and minimum volatility was our worst performing style factor, with that group of stocks closing down 0.55%. It does appear that we are having a regime change within the dollar index. Remember, this strong dollar has been a huge headwind for the equity market, and as of last week, this thing started to break down even ahead of the CPI report. After another brutal day of downside for the dollar index, we ended up closing out our UUP puts. We were long the UUP December 16th 30 strike puts. We closed those out for $1.30. We had paid 90 cents for those. Could the dollar index end up moving all the way down to this 200-day simple moving average? Absolutely, but for the most part, I do believe we caught the meat of the move. And that is why I felt pretty comfortable just taking that position off. Our S&P 500 is now trading in the middle end of this downward trend channel. We have this 200-day simple moving average just above us, and I believe that we're going to have another run-in with the 200-day SMA. Keep in mind though, we've had 2 amazing days of price action, but we have to stay centered. Our 5-day EMA is all the way down here at about 3,900. Let's actually zoom in on that a little bit more. Now, as traders, we have to be prepared for retests of that 5-day EMA. If we were to retest it, that's a good 2 to 3% move to the downside. Now ask yourself, given your current positioning, would you be in the fetal position if that occurred? If so, you must be careful with how short-term extended the S&P 500 is. The NASDAQ, which had been a huge laggard, remained above the 50-day simple moving average, also put in a nice day of green action, and we have this VPOC right above us at this 12,096.5 level. The Russell 2000 finished out once again above the 200-day simple moving average. Now, everyone defines a bear market and a bull market a little bit differently, but there are traders out there who use the 200-day simple moving average as their line in the sand, saying, hey, once we get back above that level, that's when we'll know the worst is over and the bear market is potentially over. Now consider this, the Russell 2000, when the market topped out, it was the first of the headline indices to end up rolling over and falling below that 200-day simple moving average. Now, as we got a lighter than expected CPI report, we got some good news on the Russia and Ukraine front. Whether it ends up materializing into a peace agreement, who knows, but we are starting to get those better noises. Could it be that the Russell 2000 is leading us out of this bear market? That could certainly be the case. Our Dow Jones, which had been leading all of the indices when we were still in this inflation forever scenario, ended up being the worst performer on the session today. It only finished up 0.16%. It is important to take note of these small nuances that could really signify a regime change. I do believe that that CPI report changed everything, and this trend of just dumping growth at any cost and buying up value stocks and consumer staples, I believe we're going to see that trend mean revert. And we really saw that mean reversion on full display with the performance that the ARK Innovation ETF has had over the last 2 days. We went from a low of $32.51, and just 2 days later, we're trading up at $40.40. We are currently long the ARK Innovation ETF via December call options, and I did not close out any of my position today. I do believe that we could test this VPOC up here at about $42.29 in short order. And here's the other nuance. Tesla is the #2 holding in the ARK Innovation ETF, and this thing has barely started rebounding off the lows. Keep in mind, we did have Elon Musk selling shares on November 4th, November 7th, and November 8th. And I do believe that's a big reason for all the pause and why no one's really willing to stick their neck out and buy this stock. With that said, if we do get any sort of confirmation that Elon Musk is done selling, could the stock end up reclaiming this bottom of value at $206.18? Absolutely. Could we end up moving through the value area? Absolutely. And in that scenario, I do believe we could get even further upside in the ARK Innovation ETF. And that is why for now I'm holding on to those call options. Now, what's interesting about this rally and what I think is frustrating a lot of retail traders is that once again, this is not some even rally where all the indices are moving at the same pace, all the underlying stocks are moving at the same pace. The stocks that have been moving the most over the past 2 days are the beaten down left for dead growth stocks. Case in point, Digital Turbine, this one finished out up 10.73%. We discussed this one in yesterday's market recap video. Doximity, another left for dead growth stock, reported earnings and formed a power earnings gap setup. This one finished up the day 32.7%. Shopify, we are currently long this stock as well. This one had another good day of upside, up 8.03%. And we took out this upside VPOC. We do have this 200-day simple moving average up above us at $44.51. Could we hit this level? I think that's the next destination to keep an eye out for. Even Chinese equities, this KWEB ETF finished out the day up 6.22%. This, very similar to the ARK Innovation ETF, had just gotten completely bombed out, and now we're starting to get a move outside of value. Due to this regime change in the market, I think it's more important than ever to make sure that you do a ton of scanning this weekend and a ton of homework. We are going to be putting out our weekend market analysis video on Sunday, where we take a high-level look at the broad markets and really just discuss the investment landscape. And we're also going to be putting out our weekend watch list video, where we go over the most high probability trading setups for the upcoming week. Those are both coming out on Sunday. So go ahead, visit pristinecapital.net if you would like to go ahead and receive that research. Make sure to like the video, subscribe to the channel, and we'll see you all next time.